Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for February the 2nd, 2010. Our first position tonight is going to be in the foreign exchange market. We're going to be looking at the US Swiss franc currency pair. Currently we can see that we have a crossover from vantage point that's taken place essentially towards the end of January here. We've got a nice move up. We can identify three major levels of support currently at 104.07, 104.84, and 105.51, excuse me. Now, with these three levels, unless the market makes a sustained break of 104.07, we're in a buy position on this currency pair. So what we can see here also, predicted TSI is somewhat overbought territory. Predicted MACD still has room to extend higher. However, the predicted RSI is also overbought. But again, this is a very fresh crossover. We're going to be using stops below the 104.84. Now, with that said, we're going to go in, have a look at the daily report to fine-tune our entry point on this currency pair. Now, I anticipate further strength in the US dollar. However, I also expect some corrective move in the equity markets and the commodity markets. Now, looking at predicted highs and lows tomorrow, we can see that we have 105.17 is the predicted low, 105.94 is the predicted high, and we've closed at 105.62. So what we're going to do in this case, we're going to wait for a pullback towards the 105.17 area. Once we get that pullback to this area, we're going to be entering into buy positions. Now, all our stops should always be below our 18-day predicted moving average. So our stops in this particular case are going to be at, say, 103.95, just slightly below this 18-day predicted moving average from vantage point. Very important that we have the stops this far away so we don't get caught up in the intraday trades and get indirectly stopped out with a 30 or 40 point stop. Those kind of stops in Forex very seldomly work out well. So that's our first position for tonight. Now for our second position, we're going to be changing gears here somewhat, and we're going to be moving into the equity markets. Now our second position we're going to be looking at in the equity markets on the individual stocks, the American Axle and Manufacturing, the AXL. Now what we can see here is the 18-day predicted moving average has been penetrated four times actually here. The 3-day has crossed over both the 8-day and the 18-day predicted moving average. However, subsequently we can see that it's moved back above it. With the 8-day predicted moving average from vantage point did not cross the 18-day predicted moving average. We now have the market making repeated attempts to get back through the 18-day predicted moving average at vantage point, however subsequently bouncing off. That area is currently identified at $9.44. Our second level of support, $9.61, and our first level, $9.74, with a close of $10.11. So for tomorrow, we're going to be looking for a pullback towards this 8-day predicted moving average from vantage point. Looking at the way this chart is setting up, I expect American Axle to start moving higher. Now let's go into we're going to go into our daily report just to have a quick look and make sure that that coincides with the predicted highs and predicted lows, along with the neural index. Is always good to check that as a strong 24-hour indicator. So we can see that we've got our neural index is turned back up. Our predicted high for tomorrow is 1048. Our predicted low is 976. So 976 will be our entry point for tomorrow. We're then going to be looking for about about a good 70-80 cent move. That's a nice move on a $10 stock. So we're going to be looking for almost a 10% move on the American Axle tomorrow. And again, we're going to be into buy positions, not sell. We're going to be looking for it to move just slightly lower so we can get a better price on our entry. So again, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for February the 2nd, 2010.